All right, everybody. Ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. And yeah, I feel we have a lot of regular attendees here. Guys, you know the drill. If you have any questions, please put those questions into the questions box. And Jason, thank you very much for the quick audio and screencast check. Really appreciate it. So we have got that out of the way already. Yeah, just as usual, our market movers will take us today around about half an hour. And of course, before we get started, you already see those first risk disclaimers on the screen. Please take your time, read through them carefully, make sure you're okay with them. And yeah, essentially this says that trading involves risk and you should understand those risks and the instruments you're using before you're getting active in the market. As neither Trade with Precision nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. Especially true, of course, for the main part of today's webinar. We will be looking at the markets together. I will describe what I could consider to be a short setup, a potential short setup evolving in one of the markets right now. But it's just that, it's just my analysis, my take on it. And in the end, you must own that trade. You must have your own trading strategy. You must understand why you want to take a position in the market. And I just give you the opportunity today to look inside my head and see what I see when I'm analyzing those markets. So please make sure you understand that this is never a trade recommendation, but just for educational purpose. And to finalize things here, we have also the Nadex risk warning coming up. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. Now, today's agenda, market movers, just as usual, you want to have a trading strategy, you want to analyze those markets, and then we want to trade. You want to place as many trades as possible following your trading strategy rules. Flawless execution of that proven trading strategy. This is how ultimately we aspire to make money in the markets. It's not about the next trade. That next trade can be a winning trade or a losing trade. No matter how good the chart is, how brilliantly we performed our analysis, the outcome of any one trade is random, and it's all just about a large sample set of trades. Those have to be high quality setups, and we need a strategy for that. And guys, just before we kick it off right now, we are right now in the middle of our advanced course here at Nadex. And we had the first webinar of that series already last week, where we laid the foundations and explained the basic building stones of using technical analysis. And I think this Thursday, we have the second part of that webinar series coming up, where we combine those building blocks to formulate our trading strategies. And just in case you haven't registered for that webinar yet, please, you should be receiving an email with the sign-up details. If you qualify, usually it takes a funded and an operational Nadex account to get started and to sign up for those webinars. Those are really for our premium customers. And so please have a look at your mailbox, and if you're looking for that way, how can you approach a strategic trading, or how you can utilize strategic trading for your Nadex account, that webinar might be a good part to get started. I think the second part should be coming up this Thursday. So, all right, guys, live trading and analysis. Let's have a look at the markets together, really the core and meat and center part for today. And I feel that the gold chart currently is really rather interesting. And you should be able to see my screen by now using or seeing the chart. And the first thing to notice, we're looking here at gold on a daily chart. First thing to notice, we are in the context of a downtrend. How do I know it's a downtrend? Well, I just look at the lows that price has done so far, and I look at the highs which price has done so far. And guys, it's not so important to see if this is the high here or that might qualify a high, or if this is rather the high. No, it's about the big picture that we get by looking at this market. And obviously we see this series of lower lows, and accordingly the highs are also lower. It doesn't matter really that much where is the high, and is that the low or should this be the low? No, it's about the big picture here. This market is clearly going lower. Next thing to note is I want to look at my moving averages. And you can see that once the market is going sideways, those moving averages are very, very close to each other. But however, once the market starts to go lower or starts to trend, those moving averages get much better separated from each other. We get what we like to call here a fanning pattern. Just follow along. Take the left hand or the right hand and just spread out your fingers. Just spread them out. And this is the fanning pattern. This is what we want to see here with those moving averages. You see that the moving averages are all going and pointing pretty much in the same direction, but there's good space in between them. And the further your fingers move away from your hand, the more you can see that separation. And sure enough, here in the beginning, pretty much everything is all crowded. Everything is all over the place. But slowly, the 200 falls behind, the 50 becomes clearer, the 20 period moving average falls into place, 10. And I only get that kind of pattern when the market is in a good, strong trending environment and has been trending for some time. You see, it takes some time for those moving averages to actually spread out. This is what I'm looking for. This is then the next thing to see. All right, I see and know that we are making lower lows and lower highs, and I see my fanning pattern. Two things going for me already that I see that the market is trending. Next thing that I want to see is for my usual trend following setup strategy. I want to see that price is actually not overextended. One aspect of price action is always price has a tendency to be mean reverting. Fancy words for just suggesting price usually is never going all the time in one direction. From time to time, it's coming back to its averages, mean reverting. And we use our 10 and 20 period moving average exactly to help us identify where that current mean actually would be. And this is what we see here now. Once again, price is pushing away from those moving averages and it's pulling back. And it's moving away from those moving averages and it's coming back to them. You see, it doesn't have to be a steep pullback. It can also, price can remain the same and the moving averages come closer again. But in the end, price has returned to its equilibrium levels. Equilibrium levels, price is not overextended. Now, we see that price actually dropped much lower. At that point here, everybody was telling gold is going so much lower and everybody has to be short gold. Guess what? At that point, I'm pretty sure a lot of amateur traders started to chase that market. All the media tells me gold is going lower. I have to be on that train. I have to sell that market, but not at that point. When I'm building a trading position, I want to stack as many favors, I want to stack as many advantages, probabilities as I can get, because one reason is never good enough for me to actually initiate a position. I want to have a lot of small advantages. And just knowing that the market is going lower here, that's very important to understand that I'm looking here for a short position, but not here. I'm looking for a good deal. I'm looking for a low risk position, a low risk opportunity to join that prevailing downtrend. And this is overextended. But if price pulls back to those price equilibrium levels, where price is at its mean, there I could be getting another opportunity to join that downtrend. And now this risk of a snapback is no longer there because the snapback just has returned. So I'm not just looking for a shorting opportunity, I'm looking for a good deal on my shorting opportunity. Jason is asking a great question. Guys, just a quick reminder, if you happen to have any questions, please put them in that box. I want that session to be as interactive as possible. You're not interrupting my flow, and I really appreciate those questions. So Jason's question is, how long does it usually take for price to return to the moving averages once it's overextended? Great question. I really like those pullbacks as we have them here, because this is now just 2 or 3 candles, maybe 4 candles, and this then usually means it's a steep pullback. The usual thing that I'm looking for is I'm looking that price is going lower and I'm looking for a pullback. And then I think that price has a decent probability, if all the stars have aligned, of continuing in that direction. Now, if we have something like here where, yes, we are overextended, but now price is just nearly walking to the sideways, all 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars before we actually get the next lower bar here. What happened here? Price spent a lot of time going sideways. And this is what actually creates divergence. If we have a look here, what MACD has been doing and RSI, just note when price made this low where MACD and RSI is. If it now takes pretty much felt forever for price to make a new lower low, we see a loss of momentum. What is momentum? Momentum is the speed with which the market is going lower or higher. And if I have a strongly direct move, then there's a lot of momentum, there's a lot of speed in the market. But if the market isn't going anywhere, my indicators show me that. I see divergence setting up here, because once price made actually here a new lower low, guess what? Let me just try to draw that in. Price took from here to there to make a new lower low. And if I compare this with what price or what MACD did back here, you can see that those lines are going in different directions. This is called divergence. This is not a healthy sign for a downtrend. Sure enough, we made a new lower low here, but please see how fast the momentum picked up again, how steep that decline was. And now I have speed again. And this speed is what I'm looking for. And now, according to that speed, I just have this 1, 2, 3, maybe 4 bars pullback here. And that's good enough for me. This is usually what I'm looking for, because I want to see this. Just a second. I want to see this type of steep pullback. And my anticipation, of course, is that the market might be going as fast, as steeply now to make a new lower low. Bertrand is asking, could it be the start of a reversal pattern, 1, 2, 3 bottom? I don't know what's coming next. That's absolutely crucial to understand. I'm not making any predictions. I don't have a crystal ball, and everybody who claims to have one has to prove it to me. I haven't seen it before. It's just about stacking probabilities. One tool to help me stack those probabilities is looking at indicator divergence, for example, setting up here. I saw that price made a new lower low, my indicators didn't. At that stage, I would have been rather reluctant to initiate a short position. My guess would have been that the probabilities, the chance for a 1 to 3 bottom and the market actually turning here was way more pronounced than we have it here right there. But as usual with trading, anything can happen. And because anything can happen, it's absolutely crucial to make sure that we understand our risk management and make sure that all our risks have, all our trades have the same risk exposure and are therefore comparable. Bertrand, no problem. That's what we're here for. Thank you very much for asking that question. All right, guys, let me just get rid of those beautiful drawings here. Now, next thing to note, the market is moving sideways here. What is the size of those candles? Those candles are small. Now suddenly the market starts to move. Big candles, large candles. Same thing here, sideways with small candles, and suddenly we start to see those large candles. And rather bullish candle here, indecisive to bullish candle, next to bullish candle, another bullish candle. But I hope you can start to see that those candles here are getting smaller again. And today's candle that we're seeing here with gold is also a rather smallish candle. Now, what's the type of candle that we see here? I don't believe in having to learn 300 different type of candlestick pattern names. I believe in understanding what is the candle telling me. And this candle here, let's make it a little bit larger. What is this one candle telling me here? This candle tells me, well, we tried to rally the market. We tried to make new highs today. Price tried to really push. Buyers were, they did their best. But so far, that hasn't worked out. Because although, sorry guys, although we made those new highs, sellers came back, and sellers came back pretty strong. And this is why the candle looks the way that it does. Sellers were able to drive prices down again to where we opened today's today's session, and then even some more. So this type of, now I'm bringing those candlestick names, but it doesn't add really to the meaningfulness or actionability of those. That's called a shooting star. We tried to rally prices, it didn't work out, sellers were strong, and currently it looks like sellers are dominating that session. So I have the context of a downtrend on the daily chart. I do have this fanning pattern in my moving averages. I had an overextension in price, which has now been fixed, and I'm getting this rather bearish small candle setting up here right next to my moving average sell zone, to those price equilibrium levels. So all this on the daily chart suggests to me that this market might be going at least and try to make a new lower low over the next few days. Once again, just for educational purpose, I do not suggest that you take a position like that in the market. One funny exercise, we see this pullback here. I hope we all agree that the trend on the daily chart is to the downside. And for that reason, now let's have a look here, for example, let's have a look at an hourly chart. Sorry, guys. All right. And on this hourly chart, obviously, we see a lot of uptrending going on here. And now just recently, this had to happen. Well, this uptrend on the hourly chart is obviously just that pullback that we saw over the last 3 days on the daily chart. This has to be an uptrend on the hourly chart. And today's price action, this try and push for higher prices, yeah, this is what happened here until around about 6 a.m. According, obviously, I'm based in Germany, as you can see and judge by my beautiful accent. Sorry about that. This run up here in those early morning hours, this is what made this new high. But since then, price has reversed. And therefore, yes, it must have been like that. The price has to dig deeper and actually break this trend here. We have moved below this low here. We are now making lower lows on the hourly chart. So clearly a trend to or we're shifting back to a downtrend here now on the hourly chart. Guys, it's very important that you try to exercise and understand how those different time frames interconnect. My analysis here has been on the daily chart. The daily chart for me sets the center stage, and this is the big game plan that's going on here. And then if I see a setup on other time frames, I have to try to make sense of that game plan with respect to what the daily chart is telling me here. And I want to see that those things, those time frames work together in harmony, because then I have aligned all my forces. Those forces pulling and pushing the market are now suddenly starting to add up. And this is what I want to see. So different potential ways to trade that potential opportunity and setup here. And we could now start, for example, to look at a 15-minute chart and try to look for a good shorting opportunity here and looking for potential move to the downside. What do I see on the 15-minute chart? Lower lows and lower highs. I see the fanning pattern on the 15-minute chart, very close here to my moving average sell zone again. We could be looking for a potential breakout trade from a flat horizontal level here around this 1188.6 price level. But another approach that might be usable here, and guys, there is not one right or wrong answer. It now comes really down to your personal preferences. What I'm showing you here would be my train of thoughts and my, I wouldn't say preferences, but one way to actually play that. And Bertrand has already mentioning and thinking in that same direction as I did, and when I prepared for today's session, would you look at the weekly? Yes, actually, this is what I would be looking at here right now. the question is, which of those weeklies in gold would I take? And we're trading right now at 1189, something like that. And this old low that we had was pretty much at 1160. So let's have a look at the weekly contracts with around about 3 more days going. 1190 would be trading at 57 to 65. I want to go a little bit deeper here. And the idea is that if I go for this contract here, for example, 1172.5, what does this contract mean? The contract specification. It means that in 3 days, when this contract will expire, judgment call will be if the underlying gold futures contract is trading above 1172.50. If it is, that contract will settle for 100. If it isn't, that contract will settle for 0. Now, I could sell this contract. Why sell? Because I think that market might be going lower. I could sell this contract right now for 90.25. So my risk on selling one contract would be 975. My maximum profit, 90.25. But again, price has to travel a fair bit of distance in order to give me that potential profit target. We are trading here right now 1190, and we should be trading below 1172.5. We should be trading pretty much at this orange line here and not touch it on the way there, but at expiry we should be right there. This is this fire and forget approach that you can do with Nadex contracts. But there's another way. This is the way I actually like to trade those markets. Once again, not a recommendation. I'm just showing you what I'm thinking and seeing here. All right, my demo account is currently worth about $23,300. I want to risk 1% of my account on any one given trade. Remember when I told you about that risk exposure, that should be the same all the time. This is how I do it. I take 1% of my account, and so the risk that I'm willing to take here would be $233 approximately. So it's very easy to implement that risk management strategy perfectly here, because I see my maximum loss on that trade here. And I can now just dial up that number here with my contracts, and I do it as long as that number is still smaller than what I'm shooting for. This is a little bit too large, perfectly fine. I don't care about $1, that's perfectly fine. So I can trade now 24 contracts with the idea that I'm risking just 1% of my account. And just let's place this order right now, and you see the position is already on. I sold that contract for 90.25. First approach to manage that position would be just fire and forget. I can now walk away and think, all right, if price once that contract expires is below that price level, I will get my 24 times $100, 10-to-1 risk reward to risk ratio. Absolutely awesome, outstanding. But this involves a lot of faith, determination, and believing. I don't think that trading should be about believing. I think trading should be about managing my position and managing my risk. My risk has been taken care of. And by the way, Nadex is one of the only platforms here where you can do it perfectly like that. You know your risk exposure up front. This is so awesome if you compare it to futures or stocks or CFD-based trading or anything like that, because there you have those nasty gaps that could happen any time, and suddenly your risk is much larger than you had anticipated. Here, the design of those contracts makes sure I can lose those $234, and that's it. That's really, really great. It makes following good risk management principles really, really easy. Now, one way I could manage that trade, and let's do it right away. I sold that contract now for 90.25, so round about, let's say, $10. If prices start to come down, I expect that at one point in time, those prices also will start to come down. Now, I risked $10 per contract. So if I tell the system now, I want to put in an order to buy back at 80 and do that with just 12 contracts with half of my position, I'm already locking in 12 times $10 per contract. And the remaining part on my position would be, again, 12 contracts, and the risk of those would be also around about $10. Which means at that point in time, if price on the way to expiry might dip enough to give me a price of 80, that my remaining part of that position at that stage pretty much is risk-free. That's a very crucial concept. That's very powerful. And I'm not shooting for that idea at expiry price has to be there. No, I'm actively managing my position on the way to get there. Will price get and hit my 80? I don't know. I think so. It might be likely, but that's just me. Mr. Market doesn't have to agree at all. He could do anything. It's just my game plan. So the idea is I want to close 12 of those trades at a price of 80. I'm just putting that order in now, and it's a limit good till cancel order. And you see it's sitting there. So if price dips to give me 80, I'm closing half my position and I should be risk-free at that point. With the remaining 12 contracts, I should now shoot for the stars and hope that I can make everything. Or if I think that this level might at least be tested, I feel that price could also be going, if price should be trading close to that strike price, I know that the pricing of those contracts should give me a price approximately at 50. I don't know, but this is how things usually tend to work. You can think of the price of that binary just like the delta of a plain vanilla option, and if the underlying market is trading at the strike price of a plain vanilla call or put, that should have a delta or an absolute of delta of around about 50%. And so I know that if price pulls back to hit that level, price should be somewhat close to 50. So what I can do now is I can say, all right, how many contracts will I still have open at that point? Well, 12 have closed earlier on the way to get there. I will close another 6 of those contracts, not a price at 80, but let's be conservative, let's say at a price of 61. All right, so what I'm doing now is I'm closing half of my position to pretty much wipe out all the remaining risk on that trade. If the price keeps on moving in my direction and is trading very close at the money, I'm closing another remaining half, so another quarter of my total position. And at that stage, I should have locked in a very decent profit. And the remaining 6 contracts, I could shoot for the stars, for the sky with those, and really say, all right, I think price might settle down there, and then I get $600 if price actually is no, I'm able to sorry guys, I'm able to keep those $90 per contract and 6 times $450 that I just got for selling those contracts. So this would be one possible idea on how to play this market. Any questions, guys? I know, especially with the trade management, this was now a little bit fast and maybe advanced if you haven't thought in that direction yet. But if there are questions, please, by all means, let me know. And just very quickly and briefly, let's have a look also at another market. And the other market would be euro against the US dollar. And you can see that this market has also now started a downtrend. Let's zoom out a little bit. You can see we have broken out of this level. Let's put that level in there. Here, we take this one and put that level in there. Beautiful level. You can see first touch, second touch. From here on, I was able to draw this level. And now breaking to the downside, coming back to test this level. The jury is still out about what will happen here next? I feel that we might get that same type of price behavior as we've seen in gold, but I hope you can also see the moving averages have started already. 10 is already pulling back. Let's make it again a little bit larger. And I hope you can see that just looking at the chart, the setup in gold appears to be much cleaner for me. And this is why I really focused a lot on that setup there. And guys, considering gold, just one quick side note, with the whole industry and the whole markets and taxes and trade treaties and penalties and Board of Customs and all of those things up, there usually should be this rush toward gold as a safe haven. Have we seen this rush? No, we are in a downtrend. So while I really appreciate those fundamental thoughts, in the end, we have to trade what we see. And especially here with gold, what I'm seeing here is this downtrend. And for that reason, I have no issues taking that downtrend, even if I know and think that the logical thing would be to say, okay, let's play it safe and buy some gold, bury it in the backyard. No, the market is telling me gold prices are going lower. Could it be manipulated? Could it be that the market after some time will be shooting much higher? Sure thing, but I don't know. I can just react to what I see in the market here right now. And what I'm seeing here is a downtrend with a potential shorting opportunity setting up here right now. All right, guys, so time's already up, already a little bit over time. The Nadex Premium Trading Strategy course, I already mentioned that one in the beginning. 3 webinars, each going for 2 hours. And yes, Bertrand has been asking if today's session was recorded or is recorded. Yes, it's recorded, and you will be able to revisit that session, definitely. Yeah, first part of this webinar series was already last week. Today, this Thursday will be the second part. All those webinars are conducted by either myself or my colleagues. In today's time, it will be a colleague of mine doing that webinar. You can visit our Trade with Position homepage, of course, and have a look around, and you will probably find a course like that priced at about $900. Please save your money. Open your Nadex account, fund that account, get started for trading here at Nadex, and at that moment you already qualify. So if you want to spend those $900, way better thing, and you won't even spend it because you have it available for your trading, would be to open and fund that Nadex account right away. So live and funded account, and then you're pretty much good to go. You will receive an email with the sign-up details, and if you think you qualify but haven't received anything, no problem at all. You have multiple ways to be in touch with Nadex, and for any questions that you might have, demo accounts, you've seen how easy it was for me today to place those trades and get started there. If you haven't done so, sign up for that demo account and give it a try, give it a spin. Lots of possibilities here, and really one thing that amazes me every single time is how easy it is to stick with my risk management plan. All right, guys, that's it from me for today. Thank you very much for tuning in. Please sign up for this webinar next Thursday. And yeah, I'm already looking forward to talking to you next time. So thanks again for tuning in. Happy trading. Take care and bye-bye.